Okay, good afternoon, everyone. Welcome to the weekly Levinson and Associates Training webinar series. As you know, this is the second of the week so far, so we are off to the races, and I see a lot of familiar names on already. So we appreciate you taking the time, and as always, every week, we want to make sure that you walk away with nuggets, right? That's the name of the game. You know, the point is, and I get all these emails and Facebook messages and agents saying, Bill, this was great. You know, I learned about a new concept, and which is wonderful, and I love to see and hear that. But the bottom line is when you write new business and help more clients, that's the ultimate feather in our cap, and that becomes a win-win-win across the board. So that's why we do these. So make sure you're jotting down notes, ideas. I know by the time we finish up here, you all are going to say, oh, I have a guy, I have a girl that would be perfect. I have to talk to about this strategy. So don't forget it, okay? Some of my best ideas, and I know it sounds crazy, but literally, when I'm taking a shower every day, right? I hope it's every day, 7 a.m., right? I'm in the shower, and I come up with some of my most creative ideas.
I don't know if it's just me, but I think we lost Bill. I know he was talking about being in the shower, but
we did lose Bill. He's dialing in right now, and
okay.
We will get started here in just a second, guys. Hang on, just hang the line for me.
Not a problem.
Went down the drain.
Just a quick check-in here. Can everybody hear me, Andrew, on the call? Is everybody hearing this audio come through? If the audience wants to text in, just let me know. Neandre, John, David, just let me know if you can hear me. We may have to reroute through my phone line. So just let me know.
I'm on, Andrew.
Oh, Bill, you're there. Great.
Okay. Is everybody on? Everyone okay?
Everybody's here. Yep, everybody's
Okay.
here. I did see a technical difficulty come through from GoToWebinar, so they just sent that to me. So that was a technical error on their side, but it looks like we're back in action.
Okay. Okay, great. Okay, I apologize to everyone. It looks like I was sitting here talking to no one. Andrew came by my office to remind me that there was an issue, so I apologize. All right, so obviously we're a little late, so let me, I'm going to jump right in here. I have, let's see, 1, 2, 3 slides, and then we're going to introduce our guest speakers of the day. So I'll just skip some of the first slide, but I just want to give everyone the 100-foot overview, and then we can jump right in. Just make sure, obviously, jotting down notes. I know you're going to say, I have a guy, I have a girl that this could be perfect for. And I want to make sure everyone remembers this, right? And that you know enough to be dangerous when it comes, number one, to IUL, number two, with premium finance, okay? Because it's a totally different world now. And purposely, we brought on the top IUL carrier, okay? And by the way, I'm not just saying that. The LIMRA statistics speak for themselves, and this is the top IUL company. They were also just upgraded to A+. And I'm also going to say this, and this is huge. So during the whole COVID, the pandemic, obviously, that we're all still in the middle of, unfortunately, they were one of the only companies that did not change their guidelines, okay? So that's a huge plus, and it just shows their promise to the agents and to the consumers is there front and center, and nothing changes, okay? So very, very important. And again, in the middle of all this, they were upgraded by AM Best from A to A+. So that's priceless. So we brought on the top IUL carrier and the top premium finance platform who happens to work perfectly with this carrier. So hand in hand. In fact, when we brought up to LSW, we said, hey, we want to have our top premium finance vendor on with us. They said, Bill, you got to get David on. I mean, hands down, black and white, no questions asked. We have to get David on this call. And that's how this whole thing happened. So anyway, we put together a bunch of resources for you. We have a bunch of slides, marketing material that you can start to use to send out to hopefully spark some interest, right? And get someone that says, hey, you know what? I want to hear more, okay, which is the point of all this. So if you would like to use the premium finance platform, great. If you want to sell an IUL that's self-funded, right, maybe through a business or through a family, whatever the case is, that's fine too. The only IUL today with built-in living benefits, non-med to $3 million. Like I said, no changes from COVID. SAGE scholarship approved, meaning every client gets a 1-year scholarship. That's for new clients and past clients as well. Okay, so that's another huge door opener. Of course, e-application. We have e-policy delivery through the Levinson platform. All of the above. And if you're already appointed through another IMO, but you say, Bill, I want all these bells and whistles and I want this whole Levinson package, guess what? Transfer the contract. 99% of the time, we beat your commission. For the 1% time we can't, we'll match the commission, worst case, plus you get cash for contracting or leads for contracting with your first app. Okay, so again, win-win-win across the board. Let's jump in to the first slide here. It's also Life Insurance Awareness Month coming up in September, which is right around the corner, as you know. Well, you all have to do a good job and get the word out to your consumers, right? So you say, Bill, this sounds great. What do I do? How do I get the word out, right? Everybody knows I'm a life insurance agent. Okay, well, that's fine, okay? And obviously that's important, but what's the differentiator? Why you, right? So this is what you have to think about, okay? So number one, leverage our exclusive platforms. The scholarship program for college planning, there is nothing better. In college funding, no other insurance agent has access to this. So not only can you sell, let's say, an IUL with LSW and then give a 1-year scholarship to the Smith family, okay? but you can go backwards to all of your past clients that you sold any of our 10 carriers. Let's say, in fact, there's over 100 different products, over 10 carriers. You can go back to every policyholder and say, great news, I'm a SAGE approved agent with Levinson. And guess what? I can give you this free scholarship for your grandchild or your son or daughter, nephew, niece. Okay? It's free. Free for you, free for them. Why would you not go back and open the door? It's a new reason to pick up the phone. And that's what I'm talking about for September Life Insurance Awareness Month. Insure Me Now Direct. You now have Amazon for life insurance. Okay? And it's free. Free for you, free for the client. They can go in, run a quote. They can purchase online, get an instant approval while you're sleeping at 2 a.m. Legacy Armor. That's our online safe deposit box. Okay? When you speak to a client about this, back in 1982, you'd walk into United Bank and open the safe deposit box door with a guard behind you. Okay, well, guess what? 2021? No. You go online from your cell phone or your desktop or laptop, put in your password, and your online safe deposit box is right in front of you with all your passwords, pictures of last Christmas with the family, anything that you want your beneficiaries to know about when and if you pass is in your Legacy Armor protected vault. Okay, it's unbelievable. And there's automatic ping setup. All this stuff, okay, is feathers in your cap to differentiate yourself than everyone else in the market that's pitching the same final expense and mortgage protection product. This is what makes you different, okay? Anyway, look at the highlighted section on top. This is a big deal. Nearly 31% of consumers say COVID-19 made it more likely they will purchase life insurance within the next 12 months. Folks, life insurance sales is skyrocketing. Like it or not, okay, we're in a horrible, horrible time right now with this pandemic and COVID and everything that's going on overseas. I mean, it's horrible, okay? But the one great thing right now is you're in the best industry, bar none, because everyone is concerned about life insurance. What if mommy or daddy or grandma and grandpa pass? Are we going to be okay? Well, you need to leverage this opportunity. Right? These are some bullets below that you should be marketing. Do your clients have enough coverage? Do your clients need to add or change beneficiaries? Are existing term policies scheduled to end, or is there an ART increase in premium? I mean, the list goes on and on. One of my favorites, I love the new kind of life insurance, right? That pays while you're still alive with living benefits. We can do that with term, UL, IUL, all the above. Okay, and you would think it's double, triple the price. No, in fact, it's about the same price. So you have new stories to tell. You need to get the word out to the consumers. It's that simple. We're going to send out a complete marketing piece on Life Insurance Awareness Month. We're going to give you a bunch of videos, marketing pieces, so you could start to spread the word because everyone wants to hear more about life insurance. Okay? And I'm not just, this isn't a sales pitch 101, right? This is going on, and the LIMRA statistics show exactly what I'm saying. Life insurance numbers are so high. In fact, they're the highest they've been since 1983. It's a fact. Okay, you can do a LIMRA statistics search when we're done. Do, in fact, quarter one, quarter two of 2021, and you'll see exactly what I'm talking about. Andrew, let's move on. What's new at Levinson? Couple things. I'm going to skip around because I know we're running a little behind already because of the technical issue. Carrier incentives, our online term product on Insure Me Now Direct. Okay, by the way, you have access to the only direct-to-consumer website platform that's multi-carrier, multi-product, like a one-stop shop for your consumers, where they can buy everything online. You are the agent of record, and you get paid full commissions plus renewals with the products that pay renewals, okay? And we have about, 2 new carriers and about 5 new products that are in programming as we speak. By the way, if you're not running with that platform, if you don't have it at least set up, you're riding a horse in New York City in 2022, okay, which is crazy. It's driving a car in reverse. Do not do it. So make sure you are innovating, okay, moving forward. Our keynote speaker was just announced for the Levinson Expo in South Florida, Beachfront Resort. Our keynote speaker is Mary Reed, who also works hand in hand with LSW, our main carrier featured today. Okay, so we have two of their top vendors. David is on with us for premium finance, and then Mary Reed is distribution solution concept, tax saving strategies, retirement planning. She is amazing. She's going to be live at the April 8th, 2022 Levinson Live Agent Expo, which I cannot wait. Over 300 agents from around the country, and I hope you jot down that date on your calendar. It's free, and you can qualify to have a free room at our oceanfront resort. We'll even fly you in if you hit the minimum. I think it's $50,000 total premium. So anyway, it's free though. By the way, if you've never even written an app, okay, it's free for everyone. We bring in breakfast, lunch, networking opportunities. And again, Mary Reed, keynote speaker 2022. Can't wait. On our website, we have a folder that it specifically lists incentives and trips, and all of the latest carrier trips and programs are in that folder. It's updated real time. Check that out when you can. Let's move to the middle section. New products just added for Insure Me Now Direct. I went over that, and you should have your platform up and running by now. If not, see Noah in our office, and he can help you with that. And we have a bunch of marketing videos and material all built around that. Washington State, obviously, and I'm sure you heard about this by now, they made a lot of changes with LTC. Most products are gone. We do still have one product that you can sell. So if you're interested, you have a consumer, maybe a product got pulled. In fact, they made this announcement as of August 10th. So if you need a quote, let us know. We'll help you with that. On the SureBridge side, we have a new term product just announced. We're also going to be adding that product onto Insure Me Now Direct come Q1 2022. Okay, on the bottom, we have a new annuity processing and licensing guideline link, which makes selling annuities much easier when it comes to training and compliance. So anyway, that's on the annuity section of the site. We also have our, in my opinion, the top annuity consultant in the industry, Christopher, is joining us next month, and he's going to talk all about the industry as a whole, what's hot, what's not. It's going to be a webinar you don't want to miss. On the right side, speaking of Mary Reed, we have two of her latest and greatest prospecting books for the Distribution Solution Sales Platform. In fact, we're going to give these away at the end of the webinar today. We're going to ask a question. Whoever answers first incorrectly wins the book. And I have the new Amazon Echo sitting on my desk, so you can take down those notes while you're taking a shower in the morning and you have these great thoughts that come up. You can literally just record it and speak out loud through your Amazon Echo or Alexa, okay? Makes it very simple. It's just utilizing the latest technology, as we like to say, right? Okay, bottom right corner, last thing here I want to touch on. We're talking about IUL. We're talking about the free scholarship program by being active through Levinson. We also have a turnkey IUL sales software platform that has 10 carriers that are compliant on the software. That's unheard of. It's the only IUL software platform that has 10 carriers that approved it. Okay, just doesn't happen. So anyway, you have access through Levinson. If you want to see an illustration, it's free. If you want to use the Select program, we have a co-op discounted price. Or if you write enough premium, we pay for the Select program for you. Okay, so take a look at that. And let's jump right in here. We have our featured speakers today. I'm going to make a brief introduction, and then we're going to jump right in. So, over the last probably 18 to 24 months, our numbers with LSW have literally gone up by about 5 times. Okay, and I'm going to talk about the two main reasons. Number one is product. Okay, they have literally some of the most competitive products with living benefits in the space today. Number two is our support from John and Neandre is priceless. Okay, and I mean, I'm not saying that because they're on the phone with us. If there is anything we need or you need as an agent or agency, okay, we'll have an answer literally same day, typically within a couple hours, okay, between John and Neandre. They became great friends of mine. They have a great support staff, products second to none. Okay, so we have LSW that's on right now. I'm going to introduce John and Neandre. As soon as they're done, we have David, our third-party premium finance pro that works hand in hand with LSW in these products. So anyway, it's a win-win-win across the board. John, you there, buddy? You going to start us off?
Yes, sir. Thank you, Bill. Appreciate that wonderful introduction, and welcome, Levinson friends. First, thank you so very much for the business and the support that you have been showering our way. We appreciate every app you send our way, and we will do our very best to see to it that that case from submission to commission gets processed in an expeditious manner, and we want to know about it if it doesn't. But I am thrilled that we have a few minutes to visit with you today to basically share some ideas, and I hope you will get a notepad and come up with a list of some people that may come to mind through some of these talking points that will come to the conversation today. I brought on a new agent last Friday, and I was talking to this agent. I asked them, I said, "Are you doing much in the business life insurance arena?" And she said, "No, I'm really not." And I said, "Well, I know where your office is. And I know driving up and down the strip, you're blessed with small business owners. And let me tell you, one thing, as Bill mentioned, COVID is on everyone's mind. And so I challenged her. I said, you should go out every day and take an hour a day and go out and shake hands, hand out lollipops, and just say that I'm here today. I want to give you a business card, and I want you to know we are open for business. And our customers are asking us about policy reviews, if we're still offering life insurance. Our business owners are taking a look at whether or not they need an updated buy-sell agreement. And I want you to know these are some things that I can help you with. And come up with a list of business prospects that you can bring our way, and we will help you build a case and close a case. Last year, out of the 360 plus million that we did, our advanced sales team directly worked and drove over $200 million of that business. A lot of companies have an advanced sales department, but a lot of them are for technical questions, but they really don't get down and help you build a case. And yet almost over half of our business last year came as a direct result of an agent working with their upline and us initiating a conversation with the experts at our home office. So there's never been a better time to initiate a conversation around advanced sales concepts and buy, sells, key person insurance, executive bonus. Some of these people may choose to premium finance these strategies. And that's why I couldn't be more excited to have Dave Green on the call with us today, because their platform works extremely well with our story. But before we go there, Neandre, can you share with us some of the things that are driving agents to consider doing more business with us? What is it that you're seeing that's happening that's encouraging agents to send business our way?
You know, John, really, it kind of comes down to three things. First is the ease of doing business, right? We talk about easy underwriting, we talk about e-application, and we talk about e-delivery, right? So we're able to do business from a point that you don't have to even leave the house. You can set up your Zoom office and get to work and be able to handle clients all over the country from one location, right? So the ease of doing business. The second thing touching with that is our easy underwriting, right? We're able to do up to $3 million in the IUL product for clients up to age 50 with elite rate classes. So not $3 million, but you get handcuffed to get a standard. No, this is $3 million permanent coverage through the IUL product for clients up to age 50 that they're able to get up to elite rate classes. Now, clients that are 51 to 60, we go up to $1 million of non-med easy underwriting. And clients that are 61 to 65, we're able to do up to $250,000 on that, right? So the ease of doing business, virtual everything, you know, the easy underwriting. And the last aspect of it, when our clients are really looking at growing their accumulation, not only can they grow their accumulation to an uncapped strategy using a couple of different strategies that we have, but they can also take that money and turn it into a lifetime income stream on the backside using our lifetime income benefit rider, which guarantees that once they turn that on and they're receiving that ongoing mailbox money, it will not lapse their policy. It will not stop until they pass away, right? So taking that accumulation value, growing it over time to uncapped strategy potential, and then turning that on the back end, turning that into a no lapse guaranteed payout. Those are three things, John, that are really, really resonating well with our clients, and our agents are being rock stars by using those.
Awesome. Thank you, Neandre. And before I pass it to Dave, I want to remind you too, we have a complete portfolio. We have not scaled back on the ages, and we've not scaled back on the products. So remember that we offer term insurance, and we even are one of the few carriers that have an ART, believe it or not, and it's commissionable and convertible. But we have our full term portfolio. We have universal life, traditional universal life. And we came out last year with a very aggressive participating whole life product, one of the only whole life products in the business with the full living benefit story. But most of the agents that come to us because for 20 plus years, we've had one of the market leading IUL stories in the business. So whatever the case may be, please think of us for your next case. If there's anything that we can do to help in the way of answering questions or training, please reach out to Neandre or myself. And without further ado, I'd like to introduce our good friend, Dave Green, who will shed some light on Kai-Zen. Dave, welcome.
Oh, thank you, John, and thanks, Neandre. It's fun to deal with you guys. We've been at it for quite a while. I also want to show, let me get this. I want to show you guys that you are in a great catbird seat because you've got a great IMO that will work for you. They are preferred with our company, NIW, which means that everything that you'll see here, you have access to. Also, National Life is probably one of the best carriers that I've worked with. In other words, they're the type of carrier that doesn't say we can't do it. They say, how do we do it? And so they're full on, how do we get it done type of company. And that's what I love in this industry. Now, today I'm going to talk about one of our strategies. We're truly a premium finance lending intermediary. And so we have about 6 strategies. Today I'm going to concentrate on one of them called Kai-Zen. And it's for retirement planning. So when I present this to a client, I want them to understand that we're talking about retirement income. And, you know, we might get in there and talk about life insurance, but that's more of a means to an end. In other words, it allows us the ability to get a lot of tax benefits. And so we're not using the life insurance per se as a paying a lot of low premium to get a lot of life insurance. We're doing it the other way, and we max fund all of our contracts. So let me, without further ado, because we have just, I don't know, maybe 20, 25 minutes left. And so what I wanted to do is kind of show you how I might present to a client. And so when I do that, I know that the client doesn't understand our industry and really doesn't understand this strategy until I make it aware to them. And so this is kind of how I do it. But in a lot of ways, I'm gonna kind of show you what I would say to a client and why I might say it. So I'll go quickly because you guys are professionals and you know the IUL business. This is what we use predominantly, IUL. So if I got started, I want them to know why they're working. And so they're working for 2 reasons. One, to create a standard of living. So we all love our toys and we love our houses and everything. But number 2 is a little more difficult, and that's to have enough money to maintain that throughout retirement. And so if we're falling down, it's on number 2. And if I looked at what Schwab says, they said that you need about 80% of what you were making when you retired to live on comfortably in the custom you were used to. And so I don't mention I don't ask them. I rarely will I put my client in a position where they're uncomfortable. So I will not say, what's your income? So we can I might do it later, but after we get a little more comfortable. So I know right then they're thinking if I'm making 200 grand, instantly I pretty much know that I need 160,000 a year to live on. And I'm like, oh my gosh, that's a ton. And so I'm here to motivate people to do things. So you'll find that I tend to do that. Now, the question becomes, are you currently saving enough? And so what really determines how much you'll have to spend at retirement? And it's quite alarming because how much you invest is more important than where you invest it. So current plans that we're looking at have a tendency of focusing on where we invest. So if I look at the pie of my retirement pie, I'm looking at maybe 26% of that total pie is predicated on where I'm investing that money. Now, if I'm in competition out there, everybody that I'm competing with is in this pie. And so I'm looking at annuity sales, I'm looking at real estate, securities, 401ks. Everybody wants part of their money. Now, a lot of people are not in this part, and that's the best part. And that's the focus should be on how much you invest. So in other words, how do we get more money into the pie? Well, what we're going to talk about today is helping them to get more money into their pie. So let's look at something what I call retention. In other words, historically, employees work for one company for like 30 or 40 years. It was amazing, and I could hardly figure out why, but it was pretty evident, and it was because of their defined benefit plan. All these companies had defined benefit plans, and they knew exactly what they could retire on, when they could retire, and they could spend a lot more on the everyday fun stuff. Well, what happened? Well, that went away, or most of them went away. And we know now that even defined benefit plans are taxable as ordinary income. So that doesn't help. Now, what took its place? Well, predominantly, we know that as the 401k, but that's a participating contract. In other words, the corporation may not be putting in money, and if so, it comes in the form of a match. I may get a 5% match, but it's a far cry from what I need to retire on at 80%. So what we're talking about is retirement planning. Now, if you're serious about it, you have three huge risks that could basically destroy everything that you've worked hard to achieve. And so what are those risks? And we have to try to avoid them. Number one, market risk, because most of us are in the market. There's nowhere else that we can get the growth that we need to get to our goal. So if you've been in the market, you've witnessed that risk a couple of times. Recently, when COVID hit, thank God we had a V-shaped recovery. We didn't have that much of a recovery in 2008, where the S&P dropped 39%. If I got caught in that, it would have taken me 6 to 8 years to get back to even. That's not what I want at retirement. And so that's a huge risk the older you get and the closer you get to retirement. The second one is, as we know it, tax risk. And so you look at our country's debt, it's over 28 trillion. You think it'll go up? Oh my gosh. Are you prepared to see tax rates go up to maybe 50 or 60%? Imagine for every dollar that you finally take out for retirement, you're going to give away 60% to Uncle Sam. That is a huge risk. And a lot of people will look at our illustrations and say, oh, you're showing 7.73% growth rate. Isn't that a little high? And I could say I could go to 4% and it would be nothing compared to what you're going to pay if you have this risk of tax. So it's nice to say, is there a way that we can reduce that or get rid of it altogether? And the third one is capital risk. And that's really not having enough available capital after taxes in my income to contribute in order to receive my retirement goals. And so I know that I could use more money to go into my retirement plan. And if I don't, I may procrastinate. And all of a sudden I'm 50, 55 years old and I'm thinking, oh my gosh, I better put away money. Well, you've got help. So I always say this to a client, if you could choose your retirement plan, let's just make one up. What advantages would you want it to have? And so I start off pretty easy. You want it deductible or pre-tax? And of course, they'll check yes. I hope they do. All right, now, number two, how about tax-deferred growth along the way? And they will always say yes. And I'm going fast, guys, so you just know where I'm headed. All right, how about tax-free when you take it out? And a smile usually comes to their face and they're thinking, okay, this is too good to be true. No, I'm making up the ideal vehicle. Do you want it or not? Yeah, I want it, so I'll take that. All right, if I could get tax-free income, guess what it did for me? It just eliminated one of my risks, and that's the biggest risk, tax risk. So if I could get rid of that and have tax-free income, that would be huge. as a benefit. So let's take that. Okay, let's keep going. How about market driven along the way? In other words, I like the rates that I could get from the market. So of course I'll take that. Now, if I take that, I want safety. So we'll include that. In other words, no downside interest rate risk. Well, that's pretty safe, but I get the upside of the market. That's really nice. So I'll take that. Now, if I took that, what would that do for me? It would eliminate another risk. That's market risk, which is huge. In other words, I know that even toward retirement, it can't go below zero, and I'm going to protect my principal. That's really nice. Let's keep going. You want it liquid? Of course. Let's check that. How about cash in the event of death or illness? Well, that would be nice. I mean, as a part of this, and I basically say, if we can get this, what we're doing is covering a risk that we have. I didn't bring it up, but that's a risk. So let's have that in there. And last but not least, how about matching funds? Up to 3 to 1. Imagine for every dollar that you put into this, we'll put in up to 3 on your behalf. Well, that's nice. And I'll check that. Now, if I get that, it's substantially reduced the third risk. That's capital risk. In other words, somebody's helping me to get to the end game. I want that because I'm falling behind. Now, I can get all of these except for maybe one. And what is that? Correct. Deductibility. Because Kai-Zen is a after-tax vehicle. In other words, I have to pay tax on my income before I can invest. Now, I can give you all of these in addition to that, and it's called Kai-Zen. And so that's kind of what we're talking about here today. So a lot of people will concentrate on the matching funds because they haven't heard of that too much. And so let's talk about up to 3 to 1. How does leveraging help to buy more benefits? And so the Kai-Zen plan requires that the client only pay 5 annual payments. And they can decide there's no limit on how much they can pay because it's not a government program. It's not qualified. And from a corporate standpoint, I can put this on anybody I want in the company. So it's discriminatory as well. Now, when I show about 3 to 1 leverage, I'm looking at what you put in and then what our lenders will help you to put in on their behalf. And so if it's a 5 pay, we're looking at you putting in 5 and the lender matching you on the first 5, almost dollar for dollar. And then at the end of 5, I'm finished, but the bank takes over for where I left off, and they'll put in the other amount that I was putting in. So you can see that this is a total 10-pay program, of which 25% is being funded by the client and 75% is being funded by a finance company. And so this is starting to look a little bit like a mortgage. And I'll get into that in a little bit. Now, I can do all of this lending without the typical risks of borrowing. And I've been doing premium financing for over 25 years. And the majority of it was estate planning, where I had clients with net worths in excess of $10 million, where I had to take out an application for the lending. I had to qualify. I had to post collateral. And I had to do this every year. It was a real mess. And I lost a lot of cases because they just didn't like the collateral. So what does this one figure out? So it figures that there are no interest payments. In other words, I accrue any interest that's in this. No loan docs to sign, no credit checks, no personal guarantees. In fact, not even a signature. I don't even see an application for financing. Once I get underwritten from National Life, I'm good to go on the financing. It's just automatic. They have virtually nothing to do with the financing. We do all that for you. All right, now let's get back to the mortgage, because a lot of clients don't really understand the fact that you can leverage up your life insurance. They've never heard of it, so they're skeptical. So let's suppose that I'm at a party, and I've done this a couple times. It works every time. It's without fail, it works every time. So a client always asks you what you do for a living at a party. And that you should have that pat down what you're going to say. But normally what I would say is, can I ask you a personal question? And they always say yes. And I say, do you own a home? And they go, yeah. And I go, did you pay cash or did you finance it? Well, I financed it. 99% will say that. And I go, why would you finance that? And it stymies them for a little while. And they may say, maybe it's the deduction. I go, no, no, no. You wanted a bigger home. That's why you finance it. And it makes sense why you would do that. So at that point in time, I say, are you doing the same thing to get a bigger retirement? And they go, what do you mean? And I go, wouldn't you want to add more money to your retirement with somebody else's money, like a mortgage? And they go, well, how does that work? And when I go to a party or anywhere I go, I always know what's my objective if somebody talks business to me. And especially at a party or something where I'm not in an office. And my objective is always to get an appointment. So at that point in time, I say, do you have a few minutes next week that we can go over it, because you're going to be very interested in it? And they go, yeah. So I'll set an appointment. Not maybe there, I'll call them later. But I just want to set the appointment. If you start talking about how it works, you're done. I mean, it's over. They're going to get the wrong idea about it. I want a presentation. So anyway, I'll get into this. And I said, I could purchase a home for 200 grand. Here I am in Atlanta, and I took my 200 grand and I bought my home. No mortgage. Whereas my neighbor, actually, Neandra, I took a picture of his home, and he took the 200 and then plopped down that with another 800,000 from a mortgage company. So that's a nice benefit right there. Unfortunately, I didn't get a picture of him swimming in here, but he's in there all the time. So that 800,000, I think, why would a mortgage company do that? Well, there's two reasons. One, they have perfect collateral here, and that's 200 grand. The other reason is this is basically an appreciable item. And so it will eventually appreciate. It may have some downs and ups, but it will appreciate. And so what would happen if the two of these appreciated by, let's say, 10%? So if it increased by 10%, over here, my 200 went to 220. So my net worth just increased by 20 grand. But over here, look at Neandre's. His, because it's $1 million property, increased by 100 grand. So because he used other people's money, he just picked up $80,000 more of net worth, or on paper, until he sold it. That's kind of nice. And that's why we like using other people's money, but only on an appreciable item. If I borrow $800,000 for a car, it's going to depreciate, and I'm going to pay the price. Not, well, maybe. So basically, that's why we buy the piece of property that way. All right, so what that does is lead me into, how do I market at this point forward? Now, I would just, between you guys and me, I just want to tell you about a few stats that's going on in our industry right now. Number one, 11% of all sales of items over 1 million in price are occurring online. Is that unbelievable? I had a problem thinking about Carvana or Vroom. In other words, would you buy a car on the net and just have it show up? Well, if you're over 55, maybe not. So I always had a problem with that, but that's what's happening. Number two, 74% of all buyers believe the salesperson is underqualified and has insufficient subject matter knowledge, so they go where they believe the expertise is. And they'll go online, and you have to be there. All right, number three, millennials now make up over 60% of large ticket purchases, and that's increasing. And 50% of those millennials don't want to talk or even meet a salesperson ever. So if you cannot communicate with them online, you will not. You've just counted them off, and they're a huge market. And four, 84% of buying is done via referrals. So your testimonials are your best marketing tool, and asking for referrals is critical. Yet most don't even ask for them. We have to get to do that. Now, what I'm going to do here is what I would do with a client. I'm going to go to our web-based marketing assistant. And so because people buy on the web. I'm going to help them. And so I'm going to exit here. I'm going to go to my ILIA. This is my app. I'm on the web now, and it's going to pop up. And I want to navigate them through this. Now, it won't take me long to do it. And the reason why I want to educate them on how to navigate is because when I'm done, I'm going to ask if they want this sent to them so they can play with it on their own. Now, when they play with it, over here, I'm going to tell them that these are all your educational menu tools. So you can find out how it works, how the leverage works, how you minimize risk, testimonials, FAQs, even at the bottom, enrollment. They can enroll on their own. And this is all integrated with National Life. It's just the most slick program that you'll ever work with. Now, I'm going to show you the quick 3-minute video, and this is what will pop up when they receive it. And so they'll view that first of all, and then I'll show them how to get through this. So let's start with this. I'm just going to do a quick 3-minute video, so hang tight.
When it comes to retirement, executives often think investing in stocks and other investments will provide enough income to maintain their current lifestyle for the average 22-year retirement. But in most cases, this ends up not providing the means to maintain their lifestyle throughout retirement. And when they come to this realization, it's too late to do anything about it. Most highly compensated people don't start saving until their 40s, missing out on years of compounding interest. This result is a significant loss in retirement funds, and in their 40s, most are saving only about 9% of their income. So how much should you be saving if you want to maintain your current lifestyle in retirement? 33% of your income. There's got to be another way to meet retirement goals without having to use a third of your income during your career. Well, there is. You now have a way to maintain your lifestyle during retirement. Introducing Kai-Zen. Kai-Zen is a proactive strategy that gives you access to extra money up front, providing you the potential to earn more for your retirement, protecting your future income without putting a drain on your current way of living. This strategy helps you maintain your current lifestyle in the event of a chronic illness, premature death, or inability to sufficiently save for retirement. Traditional retirement plans are typically insufficient for high-income earners. Kai-Zen is different because it makes use of leverage without the need for participant loans, interest payments, or personal guarantees. One of the greatest advantages of leverage is it provides an opportunity to significantly enhance your ability to save for retirement. Experts agree, when used correctly, leverage is a very powerful retirement tool. Even Forbes says you can leverage your way to a richer retirement. Here's how Kai-Zen uses leverage in a very different way. Your contributions are matched by the lender for the first 5 years. Then the lender uses that as security for the additional funds for the next 5 years. The contributions are used to fund a cash accumulation life insurance policy. A minimum amount is used to purchase the death benefits, living benefits, while the majority of the cash is used to maximize your potential tax advantage growth. What could be better? Kai-Zen also has unique cash accumulation features within the policy. When a major market index like the S&P has growth.
Whoa. I don't know why that shut off.
The cash is used.
Let's try to get it to go again. All right, here. Sorry about that. I don't know how. There we go.
It is calculated and credited to you. Once gains are credited, they cannot decline due to market losses. This helps keep your money safe. Would you rather have this in retirement or the potential for 60 to 100% more retirement income with Kai-Zen? Secure your lifestyle with Kai-Zen. More money, more protection, more confidence.
Okay, that's the short video, and I'll probably go over that with them. Let's do this. I'll probably go over that with, and what it does is substantiate kind of the few slides that I did show so that they kind of get more of a feel for it. But what I want them to understand is that's the video. Here's the engine of the program, estimate my benefits. And if you're, you used to be like me, you love the presentation and you love to get right into an illustration. Well, an illustration kind of went away in the 80s. That's when I was doing E.F. Hutton Life, and all we did was sell off of the illustration, and that doesn't work anymore. It's just you're going to get yourself deeper and deeper with an illustration. So if I go into estimate my benefits, I can get the client to tell me exactly what they want to do, because I don't want to be a salesperson. I want to be an advisor, so I'm going to let them advise me as to what they need. So, and then I'm just going to oblige them. So estimate my benefits, and one thing that I don't do is I say, how old are you? Because that's intimidating. Now I'm zoning in on what, trying to sell them. So normally what I would say is I was working with a guy that was 45, and it was a male, let's say average health, and he wanted to put in $30,000 a year for 5 years. Remember, you can put in pretty much anything that you want with a minimum. Here's the minimum on this age, $21,350. Now, a lot of people will note that what we're doing is we're condensing probably 20 or 15 years of premiums into 5. And so that's why we want to put in as much as we can, as early as we can, to get enough compound interest to get to where we need to be. So I'm going to calculate that, and it pops up, and bam, I've got pretty much my illustration. The first thing it does is show you how you're going to pay. Here you've paid for 5 years, the lender pays for 5, and then here we have the lender paying the total amount for the next 5. So I have a total contribution of $150, and the bank's putting in about $400. So I've got about $550 working for me. And so that they've helped me with the capital I needed to invest. So what do I get with my $150? Well, I go to benefits and distributions. So I'll show them, I'll probably go down here and I'll say, the first thing is we have an initial death benefit of $852,000. Seems like a lot, but they may have term insurance that they could say, can I replace that with the term because it's about to run out? And I go, sure, you probably need protection. So it's a part of the plan. It's not what you're wanting, because what you're wanting are tax-free distributions. So what I'm going to say is to the computer, what can I take out so that this thing never lapses from 65 to 90 based on an assumption? And so I have my assumptions down here. I'm showing a growth rate of 573. I'm going to show capital gains taxes of 20 if I'm going to compare this, income taxes of 37. Let's suppose I have a management fee of 50 basis points if I'm doing a mutual fund. And so based on those assumptions, I can take out almost $42,000 a year from 65 to 90. So if I lived to age 90, I would have been able to take out $1 million on a $150,000 investment over 5 years. Now, let's suppose Gabriel blows the trumpet at age 90. I still have a death benefit of $374 that will go income tax free to my beneficiaries. Now, if my client is reading this, they could land on these eyes or informational buttons and explain what we're doing here. All right, so they're all over the place. So if I need that, I can do that. So then they may say, well, shoot, there are other opportunities out there for you. Let's compare what's available. So I do have a graph. I'll get back to that. But I like to go right to the numbers and say, okay, with the index life that we're looking at Kai-Zen, what I just showed you, you can take an income of $41,000 a year at 65. That's a total contribution taken at age 90 of $1 million. And if I died at that age, I would get $374, but I start off with $852 of death benefit. And if I died at 90, my internal rate of return would have been $759. How can I show $759 when the crediting rate is $573? Well, I'm incorporating the death benefit at 90 into that calculation. And what does that do? It differentiates me. So what this guy might say is, well, wait a minute, I was shown a traditional IUL without the leverage. And so what we did is this, let's show what that would look like, the same product. same premiums without leverage. Well, having 75% less premium going in, it reduces my death or my annual distribution to 26,000 from 41. So do you want it without leverage or with leverage? Well, it's pretty easy. And the death benefit goes from 416 to 852. So I've cut my death benefit in half. Who doesn't like to hear that? It's the spouse that's sitting right there. So death benefit remaining at 90, 184, about double. So in other words, we've cut that in half. But now let's go to the fun stuff. I love my mutual funds and my securities. So if I'm in that, there's a couple things that I'll tell you about. But the first thing is my net income is down to 20 grand a year. Why? Because only 20% tax is levied. So tax is a real killer. Now, of course, the potential for income to age 90, and then I run out of cash at 90, is half, 531, for a net internal rate of return of 4.41. Now, notice that the mutual funds or the securities don't have death benefit, so I can't incorporate that into the contract, into the calculation here. Now, the creme de la creme, coming from a CPA, and I'm about to end here, but I just want to fill this out, is your 401k or your cash balance plan or your deferred comp. That's where I get a deduction. We actually take the deduction and put it in addition to the 30,000 that you're paying. So even with that, the reason why I'm so low here is because I have to pay ordinary income. Now I'm showing 37%. What if that went to 60? You're screwed, probably. So in other words, the more the tax rate goes up, the less that you get. And your CPA will probably say you'll probably be in a lower tax bracket at 65. And I would say, are you thinking that I'm not going to have that much money? What's the problem with that story? All right, so even with the 401k, I'm getting half the income, no death benefit, and a lower internal rate of return. Now, the problem with these two, and they're so comfortable with everybody because they understand them, is that I have the same risks associated. So in other words, I have market risk because I'm going to be in the market, and I have huge tax risk. You know, you look at capital gains at 20, if they go to 48, like it's been proposed, oh my gosh, that's not going to look that good. So I want to eliminate those risks, and I can do that with Kai-Zen. All right, now I would just go back, and I have the graph as well. So this is Kai-Zen, and that's the income, and that's the death benefit. Without leverage income, the death benefit. Here we go. You'll see that these three are similar for income. This doesn't have any insurance, and these have all the risks associated with retirement planning. So it's kind of a no-brainer, but a client might say at that time, what you're going to find is a client going to say, well, wait a minute, I'm 53, so I can plug all that in. Another thing a client might say is, well, wait a minute, I'm making 200 grand a year, 80% is 160, and I go, okay, let's take away 30,000 of that for Social Security. I'm down to 130. Let's take 30 down from that because you've got some other funds that will spin that off. So your retirement gap is about 100 grand, isn't it? And he's going to say, yeah. And I go, if you want to really look and see what that'll do, maybe I should show, because I got to get to 100, I'm going to go 80 and see what that does. And what comes up? 117. Is that crazy? I could go to 75 and I could just solve exactly what the guy needs. He says if I pay 75,000, I'm looking at 100 grand of income, and that's tax-free. That's correct. So this guy might say, you'll know real fast if he's got the money to do this. So this guy might say, well, I've got mutual funds. Can I put a portion into this? Yes. So I can look for money at this time because he wants to do this. Now, this guy might say, well, wait a minute, I just can't afford 75. And you're going to get that. So I would say, can you afford 35? And he might say yes. So I'm going to say, let's look at 35 and at least get something started because you're procrastinating. Every 5 years you wait costs you about 40% income. What does that give me? It got me about half. So the fun thing is, if I pay this for 5 years, I'm now 50 years old and I'm done paying. So in 5 years, let's look at a second one. So I'm going to go 45 and I'm going to go age 50. So let's see what that will do. And I need another 50. It may not get there. It doesn't. So I'm at 93,000. So in other words, you can ladder these and say, okay, every 5 years we can do another one until you're comfortable with your goal. So this is what happens all the time with our clients. They're going to say, I'm done with my payments. What do I do? Start another one. Now, you may say, this is kind of fun too, because National Life is notorious for this. They're so good about it. But it was, I think John mentioned it, is that, maybe Neandre, is that they have great term products that are convertible. So if a guy's worried about being insurable in 5 years, let's write a term policy on top of the first one, and we'll convert it at the end of 5 years. Automatic. Now you've made 3 sales out of 1, and they're substantial. So that's kind of how to use this. Now I could get into, and I'm going to close it off here, I can exit the demo up here and get into my client management screen. So I can manage everybody that I send this to, because I can send this to them. If I go to client management, I say, would you like for me to send you this so that you can play with it? And they go, sure. Well, that's where the millennial is really good, or the doctor that doesn't want to see you, but they want to educate themselves. So here I say, okay, I fill this in, individual, National Life, Kai-Zen, you get down to here, age, just make up an annual income. You know, another thing is National Life will allow this with household incomes of as little as $100,000 a year. That's a far cry from a $5 to $10 million net worth going in. All right, so I fill this out, and then I go to the bottom, and when it's green, I say send invitation, and I say, did you receive it? Ping, they got it. And I said, fill it out, get your password in there and start playing. I'll call you in a week. Done. All right, now, when that happens, I'm going to go back, and when they log on, this pops up in my client management. And so let's look at here. Nita, I sent that out to her. I know that she created an account and she's looking. So did Nate. He created an account. I know where they are. I know that it's delivered, but hasn't opened it yet. All right, so then as they go through, if they ever go to client man, or they go to enroll, it shows up and it said, Nate just enrolled or is in the middle of enrolling. And I might call Nate and say, do you need help enrolling? And Nate would say, because he's a millennial, no, I got through it fine. And all of a sudden, what you're going to find is when you send these out to people, you may wake up on a Monday morning and find that somebody's already enrolled and you just made money. Now, another thing that this does, when they log in, you are the agent of record. So they can't go around you. And that's what we're always worried about, because they may go to another agent and say, is this any good? Well, rarely do you find an agent that understands Kai-Zen. So they'll go, oh, yeah, I can write that. You just got screwed. Not so if I get them on here. So I've spoken enough. I tried to go fast. This is a tremendous opportunity for you guys being able to be preferred with NIW, because Levinson's a preferred arrangement. And so, of course, National Life is the king of kings when it comes to not only product, but those living benefits are so structured properly. It's so nice. So who do we have back to join me?
Yep, I'm here, Dave. Bill's here. I appreciate it, buddy.
Yeah, sorry I talked so long.
No. It's okay. We had a little issue in the beginning which pushed us back, but we're good. We have about 3 to 5 minutes left, and then we'll do our giveaway. So David, Neandre, John, great work as usual. We appreciate it. So just a couple other things real quick, getting started. I know you're scratching your head saying, this is great. I want to play around with the software. No problem. So just go to our website and you hover under products, premium finance, and that's where you submit the request in blue. We're going to send out a thank you email to every person that's on right now. Okay, so if you don't get a thank you email by midnight tonight, there's a problem. We have your wrong email or it's sitting in your spam folder, so please let us know. Okay, if you're interested in marketing material for the concept, scripts, product brochures, of course, more information on the ILIA software, everything when it comes to IUL is on the IUL experience, okay? Every single thing you can imagine, this is through our website. So if you're an active agent, you get full free access. Okay, this is interesting. Right before we wrap it up here, this is a premium finance case study that was a real case that I want to explain real quick in layman's terms. I think you can kind of get your arms around it when you think of the concept like this. And like David said, you know, think of the two, I think he said Neandre and himself, they both have homes. You know, one was 1.1 million, one was 200,000, and they look completely different, but they both had the same out of pocket. One leveraged a mortgage, a bank, right? So that's exactly what this client did that we're looking at in front of us right now. And think about this for a minute, okay? This was an agent who's on the phone right now with us, by the way. I had a client, male, 45, preferred health, PI attorney, personal injury attorney, had an existing case, okay, that our agent sold him years ago. $2 million UL plan. There was $350,000 of cash value. Here's what this agent did. We were able to leverage premium finance, okay, and put this client into a new IUL with living benefits, by the way, at the same exact premium, okay? But instead of a $2 million house, right, or UL plan, this client now has a $12 million house or IUL plan, right, for the same exact premium, okay? So think about that for a minute, okay? Look at the small house and the big house. This client leveraged this opportunity. So in my opinion, if you propose this to any prospect and you explain it like this, okay, apples to apples, premium is exactly the same, but you're going from 2 million to 12 million, plus you're getting free living benefits, okay, where do I sign up? As long as the client is still healthy, where do I sign up? And this worked perfect. Look at the agent commission, $350,000, okay? That's what the agent made by bringing this up to his existing client, okay? You see the pro tip, think of premium finance as taking out a mortgage for your life insurance policy. This works, okay? And now, starting at just $100,000 a year of salary, the client's in, okay? I mean, you don't have to be the big shot in the neighborhood anymore to be considered for premium finance. So this is real life. Okay. Also, by the way, if you have a guy or girl, right, and you need some assistance, maybe you don't know all the lingo and you're a little nervous about answering all the client's questions. They're, you know, a big shot, whatever, executive or doctor, attorney, and you need the help of David and his team. Okay, our team and David's team are here to help you. In fact, David's team will even get on the phone with you and the client. So whatever we have to do, we are here to help. Okay, next slide, Bill Levinson Experience Podcast. We have 2 new guest speakers coming up, 2 big shot agents, one out of Chicago, one out of California, both MDRT agents that increase their business, okay, over the pandemic. So you want to hear from them. I'm going to interview each of them for an hour. Great stuff to come. Next is the agency automator training. So this is cool because, you know, David just showed you that ILIA software where you can load up your prospects, right, into the CRM. Well, you can use agency automator credits or prospects from our database, right? Pick out a premium finance marketing blast or video and literally start adding names, numbers, emails, addresses, and now you get to see everything they're doing through ILIA software. So anyway, the list goes on, but check out those trainings every day of the week. And then our last slide, and once again, I'm so sorry for running over. My apologies. We did have a technical issue in the beginning, and I'm really, really sorry, but I hope the time was worth it and well spent with us. I'm going to ask our question of the day, but first, this is our Positive Tuesday quote of the week. And yes, I know today's Thursday, but every Tuesday we put these out, right, on our social media accounts, and you should be doing something similar, right? Any way to keep your name out there in front of your friends, family, network, you have to constantly stay in front of these prospects, okay? And especially even what David said with his stats slide, you have to learn to communicate online, right? If you're going to grow these days, okay? So anyway, those who don't know do all the talking, and those who do know do all the listening. The point is, sit back, listen, watch, learn. You don't know everything, and if you can pick up a new nugget or two, you can change your business, change your life, okay? So anyway, with that said, question of the day, whoever answers first incorrectly wins. I just showed an example. Oh, by the way, make sure your fingers are on your keyboard, okay, because I'm going to ask this real quick, and whoever's first wins. First incorrect. Okay, I just showed a real life case study example of a premium finance case. Tell me, how much commission did that agent make on the sale? I just showed the number. How much commission did the agent make on that premium finance sale? You say it, you win it. Amazon Echo and the Distribution Solutions Prospecting Book. Andrew, do we have a winner today?
We do. We do. The first to answer is Richard B. Richard B.
Richard B., $350,000 of commission. Richard, congratulations. Have a great rest of your day, great week, great weekend, okay? Great selling, and keep your eyes peeled for our thank you email. Take care, and thanks again, everyone.